Well, a star-studded event. You just saw the visuals on your screen. Pretty much the who's who from the world of politics, business and Bollywood in attendance marked the return of Devendra Fadnavis at the helm of Maharashtra politics and took oath as the Chief Minister of the state.
Well, ending the suspense over his swearing in and joining the cabinet, Eknath Shinde also took oath as Deputy Chief Minister. Ajit Pawar was also sworn in as the Deputy Chief Minister, effectively marking the return of the trio and the beginning of the Mahayuti 2.0 with an astounding mandate and high expectations. But I think, Aisha, that was something that Mr. Pawar already jokingly talked about, that I am going to take the oath. I don't know about the rest. But now we know who all have taken oath, at least as the Deputy Chief Ministers for now.
Oh yeah, what a grand celebration it turned out to be. Almost seemed like a national event in terms of crowd puller that it turned out to be. And yeah, a lot of familiar faces pretty much up until 5th to 10th row. But yeah, back to the markets as well, and it's turning out to be at least an FII puller once again. And what an astounding buy figure from the FIIs yesterday. Sure enough, it was a choppy session, but at the high point of the day, we were holding up quite okay, and we managed to close on with those gains as well, pretty much. About a 200-point gain coming in for the Nifty. It was technology which was actually taking the lead. Yes, they were the private banking names, L&T, ICICI Bank, HDFC Bank, etc. as well. But other than that, technology was that one dominant sector which contributed maximum to yesterday's Nifty move. And yeah, it's the DIIs which are selling 2,300 crore rupees of a sell figure, but 8,500 crore rupees buy from FIIs.
So, Aisha, this sort of comeback move in the market continues, and the strength and the comeback by the bulls in last couple of days has been more than satisfactory. No one saw this kind of strength coming. Just when it appeared that nothing was going right, the bulls have made a comeback. Now things are falling into place, which is globally markets are holding on, but the dollar index has peaked out. Yields are moving down. The long-lived China trade, nobody is talking about it. After all the hullabaloo which happened, that money will only move to China because China was cheap and China was underperforming. Third, foreign institutional investors who were on some kind of a quit India movement, they've started making a comeback. Better late than sorry. And then in terms of the news flow per se, I think the market right now is bereft of any kind of a news flow, and that explains why markets right now in a sense are really moving on technicals and on flows. I see the following happen. Look, our call for the month of December was that there is no news, there is no earnings, there are no elections. And that in a sense acted as a trigger point for the market because you had a news vacuum. And I think this news vacuum will continue till 15th of Jan, or at least till middle of Jan, because earnings season numbers will only start trickling in middle of Jan. All the budget expectations and the budget adjustment will only happen in and around Jan end. So I see the market to outperform. And the outperformance, I think, is real, and I think it is here to stay.
Okay, the outperformance is real and here to stay. And the outperformance, what was visible yesterday, was of the broader markets. I mean, the strength in the small cap index was definitely something to talk about, given the fact that, off late we had seen that there was a bit of a slowdown there. But yesterday, it was a lot of these specific stocks that were doing well, whether it was the financial market ancillaries and the BSE, CDSL, Angel One of the world. Incidentally, all of these stocks are the ones which also got added to the F&O universe very recently. So the volumes on some of these names was fairly high, and that's something that we have been tracking. There were a lot of block deals also that happened that contributed to that whopping 8,000 figure coming in of the FII buy. But overall, it is the strength of the broader market which is very visible and very very obvious. But Nikunj, that begs to ask the question, some of these stocks are the so-called penny stocks of the world, the likes of, Vodafone, the likes of Yes Bank, etc. also have started running up. Is it that time that one needs to get worried about it already? Or do you think, given the fact, of course, it was a deep correction, maybe some of these stocks to begin with outperform?
See, I think we are in the first leg of where the outperformance and the action has just about started coming back in them. Just because these stocks have moved up does not mean that is the top of the market. And I think the Johnny-come-lately crowd or the so-called FOMO effect in the market actually has started kicking in. My view is that the inertia in the market is here to stay. This market is a market where you need to be participating. The easy one for me to say, okay, buy the market on a decline. No, I'm sticking my neck out and saying that if you own stocks, don't sell it for the next 2 or 3 weeks. There is a pocket in the market where you rent stocks. You don't marry those stocks. And for me, these so-called 2-digit trader patronized stocks are the ones where you rent these stocks. So I think there is this whole rent trade which is there in some of these stocks. So using the movement in some of the penny stocks as some kind of an harbinger of market ending or market rally really reaching an abrupt halt, I think it's too early to say that. The move is obvious, but the move is not powerful. I look at participation levels in the market. Everybody has been shocked with this kind of an comeback. They've been caught with the low positions and the participation has been low. So what makes me bullish, Aisha, Anisha, is the fact that lot of news was thrown at us in October, November. Earnings, elections, Trump, dollar index, China, nothing whatsoever is there. December, there is the news vacuum. The news flow will only start from 15th of Jan. That's the time earnings season will kick in, budget talk will start, all the buzz will start, budget khabar, ye, wo, that will start. That's a good 4 weeks away. And there is no calendar event ahead of that. This market is going to keep on going higher because there is no calendar event, flows are back, and when markets corrected, nobody participated. So lack of participation, no news, momentum, FIs coming back. I think next 2 or 3 weeks look steady for the market. That does not mean that you will not see a bad day. But I think just like strength has delighted us, I think strength will continue to surprise us. It's not a market where you say, oh, sell the family silver, this is like going to get over, whatever house cleaning you want to do. No, I think you stay with the stocks right now.
Oh yeah, absolutely. And you can see the kind of recovery and the kind of broad-based move, one is seeing, be it for technology names, be it for some of those market-related themes like Anisha was talking. Look at the move on a Zomato, Swiggy, that entire, platform companies pack, a PB FinTech and what have you. All of those held out very well. Banks, it's not just HDFC Bank or ICICI Bank, but a BOB, PNB, all of them are finally participating in the market move. And that's pretty much been the case with most of the sectors. But other than that, today surely we have a trigger. It's the RBI MPC meet outcome. While it's a status quo that one is anticipating pretty much across the board, but yeah, liquidity measures, what they have to say about inflation, and I think more than that, the governor's tenure is going to be a talking point.
Everybody wants to know that, but I don't think you'll get an answer at the press conference because, he's going to dodge this question because that would be the first question and perhaps the last question because everybody in a sense wouldn't like to be, you need some kind of an assurance that, okay, there is continuity at Reserve Bank of India. So I'm actually surprised that MPC press conference is there today and there is no clarity which has come from the government. I was hoping that before the MPC meeting, when the governor will be speaking to the press, there should have ideally been, a better scenario would have been that you have clarity on either his extension or the name. Ultimately, it's the government's decision. Now, specifically on MPC, Aisha, for the first time, the RBI and the governor will have to, in a sense, really field questions on why the GDP data for the quarter gone by was not very impressive. So RBI assumption of 7% has got challenged. Is there a strong case for a strong comeback coming back in the second half? If that is true, that will excite the market. So there would be for the first time some indication on that. And then the good old liquidity question, which I think again would be an obvious hint because if the economy is slowing down, partially that is also largely because of credit availability at the lower end of the pyramid. So these are the three factors which clearly would be at play when it comes to today's press conference. Lot of questions, lot of curiosity, hopefully some answers on RBI governor's extension or a new name. B, the drop in GDP, is that like just a one-off and could it be back to that 7% projected growth of RBI? And third, liquidity measures, RBI has said that we've taken it, but is liquidity really getting tighter and tighter? And I think I also expect to hear something on NBFCs because that's where they really, in a sense, raise this alarm bell that, okay, NBFCs have been reckless, they've been taking a lot of risk. So, will he continue to maintain that? Because NBFCs have to start rolling credit for economy to come back because that's a source of income. That's a source of credit. So, these 4-5 factors.
Yeah, but still important ones to.
If you like this video, then like, share and subscribe to ET Now.